Hi, this is Zach here with US Chartbreakers here at Zach'sTradersCafe.com for Friday, the 2nd of June. Starting off with the S&P, and here we've got a decent slow breakout, which maybe in a way is better than a fast one. Breaking the resistance line there from August around 41.50 and pushing higher. 4,200, obviously the psychological level, that's been cleared rather easily as well. The view at the moment is that while we're above old April resistance around 41.80 to 41.90, we're looking for 43.60 perhaps as soon as the next 4 to 6 weeks, maybe even by the end of this month. Nice RSI bounce above the neutral 50 level and certainly not overbought at the moment. On the downside, if we break back below 41.80, then there's the risk of maybe 41.30 in that August resistance line tested as new support, but at this stage not really expecting much worse than that, especially given the way that the 50-day line is currently around 41.20, just below that resistance line. On to the stocks, and quite a few repeat offenders, if we can call them, stocks that have gone up and kept on going up. One of them is Carvana, which is a favorite here, largely on the basis that we've had now two unfilled gaps to the upside, one through the 50-day moving average and one ahead of breaking above the 200-day line around $13.60. Above $13.60, we're looking for as high as $22 by the end of next month, and certainly not looking for any price action, really sustained price action back below the $13 area. Moving on to a stock which is also looking good on a fundamental basis, but here we've got Chewy, and the shares have broken a line of resistance there from back in January, gapped above the 50-day moving average around $33.80, and above neckline resistance there at $35. We're looking for the shares to head up towards the old March peaks on the way down as high as $42 by the end of next month. But the key here, probably holding above the 50-day moving average at $33 at the most. Moving on to Draftkings, which is regular here as well. Here you can see that we've got a rising trend channel which has been in place since November. Floor of the channel there around $22.40, gapped up at the beginning of the month and held that gap. That suggests that minimum on the upside $28 by the end of this month. Best case scenario target up to $34 by the end of next month, which is a September 2022 resistance line projection. Moving along to one of the hotter stocks at the moment, GSI. Here a beautiful bull flag breakout there, the old resistance around $70.30. We managed to break one of our previous targets around $70.50, and above that looking for a fresh leg to the upside, maybe as high as $9.50 by the end of this month. But what a chart there, a rising flag there and a rising flag breakout. We've also had a golden cross between the 50 and 200-day moving averages in the last week to 10 days, which is another positive. On to Marvell, where the good news is that shorters have lost a lot of money. Here we had our initial rather pie in the sky target around $61. Above that, we're looking for as high as a June resistance line projection at $76. Maybe as soon as the end of this month, but over the next 4 to 6 weeks. The other positive is that as of yesterday, we were just about to deliver a golden cross between the rising 50 and 200-day moving averages. So what a chart there. Two unfilled gaps to the upside, and it'd be really good as well if the shares managed to hold above the top of that gap there at $58, which was also August 2022 resistance. But let's see how we do on that. Nvidia, the other star AI play at the moment. Here, similar picture really. The bubble is certainly going there with the AI stocks. 370, the notional support. Looking for 450 as soon as the end of this month, while we hold above 370. And if you're found the shares and looking for the stratosphere, $500 maybe by the end of next month, which, although it seems rather ambitious, the shares have delivered more than that in the recent past. Moving along to another favorite here at the Chartbreakers, OpenDoor Technologies. Here we're gently breaking through the 200-day line, but broken above it at $2.30 there, and looking for $4 by the end of next month at the top of that broadening triangle from November. This stage, the 200-day line regarded as the ultimate support there on the shares. Stock which was obviously a big COVID play, Pelaton Interactive, looks like it's finally breaking out of its doom and gloom that's been in place so far this year. $17 down to $7, not rather nasty. Breaking that line of resistance there around $7.30, let's say, and above $7.30, looking for at least a fill of that gap up to $8.70 over the next few weeks. Nice divergence there as well, with the RSI breaking out towards the 50 level, but the main thing is that trendline break and a potential gap fill towards the $8.60 or so area. On to stock which I've covered quite recently, but here we go. What a mover. Pure Storage hitting the top of that broadening triangle there around $35.50. And the longer we stay above the old resistance around $32.50, the greater the chance of a fresh leg to the upside, up to a line of resistance from back at the end of 2021, currently heading for $45 or $46 even, potentially as soon as the end of next month. Beautiful bear trap island reversal, so gapping down there in February and then gapping up twice over the course of May going into June. And I think if we break through that $35 barrier, we could see some fireworks there. Next up, the poetically named Sunrun. Here you can see that we've got a broadening triangle there, top of the triangle there at the 200-day moving average, $25. That's the target the longer we stay above the 50-day moving average around $18.50. And hopefully we could see $24 as soon as the end of next month on a bear trap situation from below May support last year around $17. Moving on to a stock which has been regular here, or was a regular here when I was covering the US stocks during the pandemic. Now we've got a situation with Transocean has widened its broadening triangle. The support here now notionally around the $5.70 level, and we're waiting for the shares to break a line of resistance from the beginning of the year through $6.30. If we can do that over the next week or two, then it could be a journey up towards $9, and that one even greater by the end of next month, which is the top of that broadening triangle from September. On to a stock where the bears are starting to bite, or trying to bite. They've obviously bitten quite well so far. We peaked above $5. What was interesting with yesterday's price action is that the rebound came in above the 50-day moving average. I think the 50-day line, the line in the sand there, around $2.40. Above that, we can say that the glass is half full rather than half empty, and we could see a retracement back to the $4 plus area. Otherwise, the risk is that below the 50-day line, we could head back to April support around $1.70. On to the last few. UCAR is next, and UCAR, otherwise known as UPower. Here we can see that we've gapped up within a broadening triangle. Obviously a rather difficult one to get a handle on, but we had neckline resistance there around $5.20, so above that, looking for a retest of the top of that triangle through $11 over the next month or so. Upstart is a firm favourite and a regular here at the Chartbreakers, and you can see why it's been a steady progress for the shares over the last few weeks, and obviously before that as well. We're coming up against $30 resistance line, which was a target previously. Next level up to as high as $37, and an August resistance line projection. Hopefully we can see that by the end of next month. Finishing off in this rather marathon session with Uranium Energy, and here another one of those gap higher situations near the lows through the 50-day moving average. We see this a lot. Above 270, looking for 350 by the end of the month at the not only the 200-day moving average, but the top of that broadening triangle from March. That's it for me today. More updates over the weekend.